Hello and welcome to episode 299 of the Money to the Masses podcast with your resident expert, as always, Damien Fay and me, Andy Leaks. Damien, welcome back. How are you doing?
I'm very good, Andy. I'm excited this week because we did our live event, didn't we? The Ethical Live event on Monday, and this podcast is the highlights from that show, and it was a fantastic event. I love doing them. I think people get a lot out of them. We had so much engagement on that particular live event as well. I think ethical investing is really gaining popularity and struck a chord with the listeners. So yeah, I'm absolutely buzzing after the event.
It was a great event, and I think there was a lot in there, not just for beginner investors that maybe haven't heard of it or what it's about. There was some more technical stuff in there as well for people who maybe thought they knew about ethical investing and ESG. There was a bit more for those too. So it really was quite a rounded piece, and we've selected the highlights from that show for this podcast, and you're going to talk a bit more about what we've selected and who was on it.
Yeah, so the pieces we've selected are probably the questions that teased out some of the stuff I really wanted to cover, the sort of hows, the whys, the actual practicalities of picking investments. And the show, just to start off, the two guests are Moira O'Neill, who used to be the editor of Money Observer Finance magazine, is now part of the Interactive Investor group, and Interactive Investor owned Money Observer, if you recall, and seemed to be almost pioneering some of the ethical investment research in the platform space. We'll talk about it on the show, you'll hear it. They have their own sort of research and best buy list, as it were, sort of a short list of ethical funds. It's quite difficult to pick and isolate funds that will match your ethics. So we delve into that in the live event. And the other guest is Alice Ross, who is from the Financial Times. So she's a very successful journalist. She wrote a book about climate investing, and it's just come out. And it's a very good book. I've read it. And she was a great person to get on to start talking about this whole ethical investing and tackling climate change and the good you can do with investing your money. So they were the two panelists for the show. And just to give you an idea of the sort of momentum that's behind the shift towards ethical investing, as we did touch upon it in the wider show. So if you do go and listen to the full show if you want to on our YouTube channel, it's an hour long. We pack so much content into that hour. But on Interactive Investors platform, for example, about 5% of assets are in ethical funds. So that's up from about 1% in a very short space of time. So there was a definite trend. It isn't isolated by age. It's across the board that people are now questioning where their money is going, what good it's doing, what bad it's doing, but also the fact that you don't have to give up the return. So Andy will kick off the podcast audio in a second, and then we'll come back at the end of the show just to sort of finish things off. I mean, what is ethical investing? What do we mean by that?
Goodness, I can remember writing about this when I started out as a cub reporter about more than 20 years ago. And back then we talked about ethical investing being something that was extremely niche, that was something that you would invest in funds that avoided the bad stuff. So things like tobacco or weapons and that kind of companies that were involved in those areas. And over the years, I've just seen it evolve. And I think now we've reached a point where ethical investing is much, much more mainstream, and there's lots of different approaches to it. And I think it's really entered the public's consciousness that you can invest and grow your money, but align it to your own personal principles at the same time to make sure that your money is doing the good that you want to see it doing in the world.
One of the things I want to pick up with Alice is climate investing. So this is quite an interesting branch of ethical investing, isn't it? And it's something that your book is focused a lot on that and the other areas that Moira mentions. But that was off the back of an article you wrote a couple of years ago, wasn't it?
Yeah, exactly. So, the whole book actually grew out of this article that I wrote last summer, so 2019. And I'd been just personally feeling quite stressed about climate change. This was before we had a global pandemic to stress about. So putting it in that context, but stress levels were probably quite low. But it was horribly stressful at the time, and I think the Amazon was on fire, and there were all sorts of reports out about how dangerous climate change was. And then, as it happened, the editor of the FT Money section, Claire Barrett, asked if I could write an article for the weekend paper And she said, you can really do whatever you think is interesting right now. And I said, well, can I maybe write about solutions to climate change investing, which is this new area that I was just learning about then? Because I found that really quite a positive thing to learn about, that it wasn't all doom and gloom. There are these companies out there, really trying to sometimes invent cool things that are going to help to combat climate change. And, it sort of gave me hope. And in the book, while I talk a lot about climate change investing, I'm not really talking about the scary facts and figures around climate change, because I kind of assume that people know all that already. And that's why they want to now look at their investments and invest with climate change in mind.
So we have ethical investing. People will hear things like ESG investing, socially responsible investing. Alice, could you just quickly clear up some of those acronyms? Because you do it very well at the start of your book, because it's something that's evolved over time, hasn't it? It's something that we've had for a while, and then we've got through to this sort of ESG phenomena.
Yeah. I mean, Moira will know this as well, but, Moira, when you said that when you started out 20 years ago, it was seen as such a subset, such a sort of a niche thing, and almost a bit of a weird sort of do-gooder thing to invest ethically. And that's been my experience as well. But back then it was called different things. So it might have been called ethical investing, or then it was called socially responsible investing, or SRI. And now the term that you tend to see associated with ethical investing is ESG, which stands for environment, social, governance. But what can be confusing about that to investors that want to invest with climate change or the environment specifically in mind is that any company can be in an ESG fund, or it can be called ESG friendly, if it just ticks the S or the G side of ESG. So it could be a company that has really great governance and it's doing everything right in terms of how it manages itself, or it could be a company that's treating its workers really well, but it could be a company that has nothing to do with the environment. So I think that confuses a lot of people early on, because they think ESG is sort of associated with environmental investing. And while environmental investing is a part of ESG, it's not all of ESG. So that's the first thing that people probably need to sort of get clear when they're thinking about doing this.
But to many people, some of those things may be more important than others. So, really, ethical investing is a personal thing, and some people may care passionately about climate change or the environmental side of things, and others may be more worried about societal impact or how companies are run in a good way, in a regulated way, and how business is done. So I think there are lots of different approaches to this, and although climate change has reared its head because of things like Greta Thunberg and David Attenborough documentaries, etc., really seeping into our public consciousness. We're watching Netflix, etc. You see there are other issues that other people might care about too. And I think really you have to think quite carefully about what matters to you before you plunge into this whole area.
If you're going to pick an ethical fund, so an ESG fund, whichever you're going to pick, does it mean that gives up performance? Because people will naturally think that you narrow down the spectrum of companies that you can invest in potential, that fund manager who runs that in an ethical way, that fund. Does that therefore impact your returns?
Well, the answer is really there's a growing body of evidence that suggests that it doesn't impact your returns. In fact, it might help them. So companies with good environmental, social and governance practices should be expected to outperform their less ethical counterpoints, especially as interest in sustainability in the environment grows. There's a study earlier this year by Moneyfacts, an independent study, and that found that ethical funds that UK investors can access have actually proved particularly resilient during the coronavirus pandemic. So that's the recent performance of the funds has been pretty good compared to the non-ethical propositions. But we found there's a very, very impressive piece of evidence, which is a study of studies. It's an academic study, and it was done by the University of Hamburg in 2015, so 5 years ago, but still pretty relevant. And it looked at 2,000 studies since 1970 into the impact of returns of investing along these ESG lines. And it found that in 62% of the studies, the use of ESG criteria had a positive impact on the performance of the fund and the investment. So I think it's quite a powerful study of studies to show that there is an academic body of evidence out there that shows this stuff can work and can deliver good results for investors.
I mean, how do their credentials stack up? Gareth has asked a question here. How do they stack up? Stephen's asked earlier, is there like a rating or scorecard we can use in some way when it comes to investing in any of these funds? I mean, Alice, do you have a view on that?
Well, I mean, one of the issues with the industry at the moment when it comes to ethical investing and climate change investing is that it's sort of, I think of it as an industry that's very much at the start of its journey. We're sort of in the foothills of the whole ESG, even though it has been popular for a few years. It's still, as Moira was saying, it's only gone from 1% to 5% of users on the website that she's in charge of, investing in these funds, which is actually still quite small. So there is a lot of, I wouldn't go as far as to say it's the Wild West in terms of ESG credentials, but a lot of the industry hasn't agreed exactly how to define ESG. So this can be an issue, which is why sort of at the moment it does help to understand yourself the way that the terms are being used differently by different fund managers in different funds. But I mean, Moira, you're very well placed to answer this, because I know that you guys have rated some of the funds and you've made some recommendations about which ones you think are good.
Yeah, well, Alice, I mean, when we tried to look into this area and thought we need to really try and educate people on this, we thought the first step is to find the funds, and there are 5,000 odd funds out there that investors could use, and I'm including open-ended funds and investment trusts and the passive investments called ETFs in that too. So we looked at what was actually on our platform, because we have most things available, and we found about 150 options. So that's our long list of what's available. So that just shows that the market's pretty immature and they're not that easy to identify. We had to do a lot of work to identify them, and that's because there's no fund sector that's ESG or climate change where you can compare like with like, and they don't even have consistent naming conventions either, so it is pretty difficult to find them. And that's why we feel what we've done has been a really valuable thing for investors, to actually list 150 options that are available, and then we've narrowed that down to what we think are the best in class investments within that group as well.
Do you think there's an element of greenwashing going on in some of this, though? Because I know as this trend starts to mature, fund houses are wonderful marketeers. We've all been around them and talked to some of the managers and all sorts, but they are very good at sort of capturing the trend that people are interested in. And is there a danger that there is some of that out there where people are saying that they're focusing on the E or the S or the G rather than actually being truly ethical? It's the same fund, but they just said, we're a bit more ethical.
Yeah, well, we polled 21 asset managers this summer in the ethical investing space, and that most of them said that they think that ESG considerations are going to in time be integrated into all investment decisions, which means all funds out there will have some element of ESG in them, and that's where it's going to become really difficult for investors. And in fact, the financial regulator, has expressed some concern about this, which we call this greenwashing phenomenon, and we need to protect consumers from being misled about the suitability of investment. So just because it's got a name that has green or sustainable in it doesn't necessarily mean that the underlying investment is. I mean, the Investment Association's done a bit of work to try and create a common language across investment funds, but I still think there's a bit of a alphabetic soup of investment jargon out there that doesn't really help the consumer identify what is genuinely ethical or ESG.
I think fund managers are aware that this is quite trendy right now, and so you do see some of them trying to launch funds or sometimes rename existing funds to say that they're sustainable. There was actually an investigation by Morningstar, which is a ratings provider, and lists funds and categorizes them last year, and it found that more than 250 funds last year had repurposed themselves from traditional to sustainable. But when it investigated, it found that in some cases the fund managers has changed the fund purely for marketing purposes without changing the structure fund or the investment philosophy of it. They just made a few tweaks, like removing some of the really dodgy companies. But would you really call that an ethical fund? But the problem is that when fund managers do that, it's not obviously breaking any rules right now. So I think that's quite a good insight into some of the sort of grey areas that we're dealing with here.
Most of the ethical funds that are out there tend to be active. So people who don't know what that means, there's normally a fund manager who is picking the individual companies for whatever reasons to make sure that they meet a particular remit that they've got or a mandate, and therefore the belief obviously is that that's more expensive way of doing it. There's extra charges, but what about investing passively in an ethical way? Are there options out there to do it? I mean, Alice, you talk about this in your book in particular, so it'd be interesting, and some of the drawbacks actually, because you mentioned about these sort of indices these track.
Yeah, so basically you can totally have a passive ESG fund. At the moment, what you have is the index providers that are creating the normal indices like S&P 500 or FTSE 100 index that, a passive fund will track. They will modify that a little bit. So they'll call it, actually, Moira, I'm not sure is there a FTSE 100 ESG or FTSE all companies ESG, but you'll know the more specific. But anyway, some of the mainstream indices, they'll adapt them and have the same name with ESG added in.
There's a FTSE for good, Alice.
FTSE for good, of course.
Yeah.
I was about to say the FTSE for good's out there.
Yeah. And then MSCI has various ESG indices based on all of its indices around the world. But they'll just tweak it a little bit, and they'll sometimes remove the offending companies or the really obviously offending companies, and then they'll maybe change the weightings and overweight it a little bit towards some of the, in their eyes, more sustainable companies. But I think what's important to understand is that this is, again, only the opinion of the index provider, and you can have quite different opinions on whether a company is considered sustainable or not. So you have like some slightly controversial companies like Tesla. Some indices will include that in their ESG, ratings as an ESG friendly company, and others because of the environmental side, and others really don't because it has, questions over its governance. And so it is all a matter of opinion at this point. So you run that risk when you're buying a passive ESG. But equally, I think you also run that risk when you're buying an active fund, because that's depending on the fund manager's opinion. But in both cases, you can sort of do a little digging yourself and try and work out what the philosophy of the fund is, why they've made the decisions that they've made, and then ask yourself, well, am I comfortable with that? Does this align with what I think? And you can probably find something that aligns with whatever it is you think, whatever your position is. There'll probably be something out there that is right for you, whether that's active or passive. But if you want to invest passively, you certainly can in ESG.
Given that the UK and soon to be the new US government are looking towards cleaner energy and legislation, I mean, which areas and sectors do you think will grow ethically over the next 3 to 5 years that may not have been thought of? I'll broaden that question really to cover do you think there is this wave now for cleaner energy, more ethical funds that's being driven by governments who are trying to rebuild economies in a greener way? Are we actually at the start of a trend, do you believe? Because you touch upon again that in your book, Alice. I mean, particularly in the US.
Yeah, definitely. I mean, it's basically all sort of happening at once at the moment. Governments are introducing much stricter targets for climate emissions, whether that's, introducing zero emissions targets for 2050, as we've introduced in the UK as a country, or whether it's introducing specific targets in specific sectors like electric cars. We now have this target to mostly be driving electric cars from 2030, which is quite a massive development. And that's going to lead to all sorts of knock-off or roll-off sort of situations with electric cars, and not just battery technology, but also infrastructure and charging points and all that. And there are companies springing up to try and meet all this demand and do all of this. And, it's possible to invest in these kind of companies, which is really fascinating, not always through listed funds, because some of them are startups, which can be a bit more risky. But yeah, and then at the same time, you have regulators, looking at introducing regulation to punish companies more for having too many emissions. And then you have investors as well, demanding more from the companies they invest in. They're getting worried about climate change anyway, and they're putting pressure on companies to do more to disclose their emissions and also to disclose their climate risk, to have a plan to cut their emissions. So the companies are facing pressure from the investors, and everything is sort of moving in this similar direction. Interestingly, I saw one of the commenters was saying, shouldn't all investment be sustainable? And there is this movement, as Moira was saying as well, to make all investment carry an ESG factor to it, because that does seem to be the way that things are going. And it isn't just a sort of a thing that you tick a box or you consider ESG or you could sort of not consider it. I think it's becoming something so much more central that you have to consider across all types of investment.
Yeah, I would add, we talked about clean energy there. Now that there are products that invest in themes like that, and for example, there's an ETF that invests in global clean energy, and it's done absolutely amazingly well. And as a result, we were holding it in our ethical growth portfolio. We've actually dropped it because the key with all of this is to make sure that you have a balanced portfolio that has exposure to lots of different types of investments and doesn't just concentrate on one particular theme. And, if something does particularly well, then you've got to think about readjusting your portfolio and sort of almost selling your winners and buying some other things that haven't done quite as well. If you're very passionate about this area, you might think there's this great thematic investment out there that I really like the sound of, but please don't pile everything into one theme. Spread your money around. I think that's probably a better, less risky strategy.
One of the things that when I did some research before looking at the ethical funds that had done quite well, and one of the two trends really that came to the fore, there was a definite bias towards smaller companies and there was a definite bias towards technology in there as well. So two trends that have done really well compared to their sort of counterparts in the sort of recent history. Is there an element where if you invest ethically, you need to look under the bonnet for these things? Because you could actually be taking a style bias that is potentially boosting your returns, but actually therefore skewing your portfolio in a certain way. You need to counter that.
Yeah, I mean, we decided to try and get our own criteria for ethical investing. We came up with 3 different styles, which we think most funds would broadly fit into. So one is what we've already talked about already, which is screening out the bad stuff. So we call that avoids. And then there's the style where it's mainly active fund managers are going in and looking at under the bonnet of the companies that they're investing in and seeing what their ESG practices are and taking that very seriously. So we call that considers. And then there's a different style where it's thematic and the whole ethos of the fund is to look at a particular theme or sector and fully embrace what's going on. So we call that embraces. And I think you've got to think about the balance within the portfolio and what you're putting in there and whether you've got exposure to different regions of the world and different industries, because I think that's still very important when we're investing our nest eggs for our retirement. It's true, Damien, if you did go into clean tech or clean water or clean energy, you're very potentially in an area which could do fantastically well or it could do badly, and you might have a limited exposure to a particular sector or even region of the world.
I would add that that's totally true, but also happily, there are areas of environmental investing that do involve less risk. I think often when people think about climate change solutions, they're thinking about, clean tech, alternative meat, these sort of new startup companies doing these really interesting, crazy things, but that might be more high risk. So you do have the potential for higher returns, but you're taking more risk. But actually, a lot of what is needed in terms of environmental investing is energy efficiency and things looking at the circular economy, recycling and waste management. And in a way, quite boring stuff, like not the kind of stuff that's going to make you feel really excited, like, that someone's inventing something new. But really important for all companies in any sector to cut their emissions. So you do also have investors or funds that are targeting companies that are, setting any company, be it Microsoft or something, that are setting good targets on reducing emissions. And a lot of those companies do tend to be large and listed and, so not the kind of companies where you're going to, make crazy returns. But, that's great because that's what a lot of investors want, is something a lot safer. So a good thing about it is depending on your risk profile and how much risk you want to take, you can probably find companies and funds that will suit you depending on what you want to do. You're totally right that you need to check that you're balanced out in terms of all the sectors and types of companies that you've got in your portfolio.
Assuming that people are willing to run their own money and they want to look at these investments, I mean, what sort of tips that you would give to be able to start from day one? So we're not allowed to say pick what aligns with you because we're going to assume that they're going to do that. I'm thinking more of the sort of practicalities. How do you pick an ethical fund? So Moira, if you want to kick off, how would you go about picking an ethical fund for a portfolio that you had?
So, I mean, I would start by looking at the UN Sustainable Investment Goals, because they are a good source of things that you might care about, and look at, and first try and work out what's most important to you. And then, you can come to Interactive Investor and view our content for free. You don't have to be a customer. So you can see what we've put on our long list. You can see what we've put on our our shortlist. And you can also see what we've put in our ethical portfolio, which will give you lots of ideas. But there are other sources out there too. One is called Fund Eco Market, which is a really great website that sort of focuses in on the core issues and the different approach of fund managers, and it goes into it in a lot of detail, and you can really sort of drill down and find funds on there. Morningstar has a criteria that can help you sift through funds. It has a sustainable fund type, and it also publishes carbon scores for funds as well. So there are some good tools out there to help you narrow down your selections. But I think you have to think about whether you just want to screen out the bad stuff, or whether you're so passionate about this you want to choose a fund that's going to change the world. And I think those are the key things to get straight in your head before you start sifting through them.
I mean, that's great, because that gives people a starting point, because a lot of the stuff I find people struggle with getting there, sort of the first rung on the ladder to be able to do some research. Once they can see maybe perhaps how you've done it, then maybe they on Interactive Investor, then you could perhaps then they could take that further and start to analyse it and do it themselves. Can you explain just very briefly the benefits of being an ethical investor in bonds? It doesn't sound very sexy and exciting buying in bonds rather than equities, but they do have quite a strong impact, don't they, on companies and their behaviour?
Yeah, it's interesting. I think often when we think of ethical investing, we think of equities, and that's the main thing we think about. But there's a growing sort of school of thought that says that if you're selling or buying shares, you're sort of just, passing bits of paper from one investor to another. And where you can really have an influence is through being a bond investor, because those are, a company specifically needs your money as an investor for usually a specific project. So any company can issue a green bond if it's for a project that is sort of labeled as green. So you could give a company money for this specific green project to help it to do that. So you sort of have a better idea of where your money is going. So that's good. And then bond investors that I've spoken to have also said that it can be quite handy around the negotiating table if a company is looking to refinance a bond, or it wants more money from you, the bond investor. These are professional investors, obviously, with a lot of money. That if you can push them then at that point you can say, I'm only going to refinance you if you look a bit more at your climate change targets or something. So there's more of a conversation going on more often, which again is good from the influence point of view. I mean, one thing about green bonds that you do have to bear in mind, we were talking about making sure that you're not overly concentrated in certain areas with shares. Well, green bonds, while they are rising in popularity, they are huge to certain sectors. So they're most commonly issued by utility companies, banks, and European companies at the moment. So you should be aware that if you're buying, say, a green bond fund, that you might have more of a skew to those areas. So you should just be aware of that.
And then Moira, coming back to the research that you've done at Interactive Investor and screening out some of those alternative asset classes, I mean, there aren't many options, are there, in that space? I mean, there's one or two that have performed quite well, which we've talked about before, which I mean, it'd be good if you could mention them. But there are some options, if albeit limited.
Yeah, for bond investors, we do have quite a few bond funds on our rated list, our ethical list. And so let me just count out 1, 2, 3. There's 6. So they go.
That only just beats the word few by.
That's in our best of class list. We put 6 bond funds in there, and they range. There is a green bond ETF there too. Yeah. There are sustainable ones which have sustainable in their name. One which has ethical in its name, and one which has social in its name. So there's lots of different approaches you can take to bond investing, and I think they are great diversifiers for your portfolio, because they will perform slightly differently to the equity, the shares side of your portfolio. But we didn't find, for example, an ethical commercial property fund, which we would have on our mainstream list. We didn't find an ethical gold fund or something like that. So some of the major asset classes we didn't find options for in the ethical sphere. Also, we didn't find a lot of income funds in the ethical area, and I know a lot of people want income funds because they're investing for retirement, etc. And the sector is not so mature. There aren't really that many sort of bog standard income funds out there.
Is that because there's not enough oil companies that aren't polluting the world that can produce a decent dividend, so they don't have as wide a choice? But
it could possibly be an element of that. But
yeah. But it just shows you, though, that there is a real choice out there. And I want people to take away from this part of the show is that you do have options. There are ETFs, there are tools out there that you both mentioned that you can use. Alice, you mentioned in the book one of the things about pensions, because obviously that's where a lot of people's invested wealth probably is in the mainstream, in their company pensions or their private pensions, and they actually have quite a bit of power whereby they could choose to invest that ethically, can't they?
Yeah. I think, for a lot of people, a lot of people may not have any money to invest aside from their pension. And a lot of people, their pension will be something that they have through their company. They'll have signed up to their company's workplace pension plan. And, these days, for most of us, that's going to be a pension plan where you get to choose, possibly out of a small range of funds. There should be an ESG option, an ethical fund option within those funds, but it's probably not going to be the default fund. So the default fund is the fund that you get put into by the company if you don't make a selection. And apparently over 90% of people that are put into the default fund never change out the default fund, even though you can. So that's one thing that you can do immediately. Is your company pension fund like a bog standard fund? Is it the default fund? Or could you switch it to a more ethical option? But you may find that you don't like the other options on offer, in which case you can talk to your company about it. And if enough of the employees at the company tell the company, well, we want you to, give us some better options, give us some better ethical options, then the company, will hopefully take that into account, because there are a lot of other pension providers that the company could go to. So hopefully we can sort of see this pressure from the ground up when it comes to company pensions as well. And happily, on the other side of things, the actual pension providers themselves are also looking much more closely at this and, looking at actually making the default fund an ESG fund. And that's something that we're probably going to see more of in the years to come.
One thing I want to add to that on Alice's point, if you want to do ethical investing and you want to have choice, you have to be a pain. And there is an element where I think if everybody watched this show, decided, look, I'm going to go and look at what my pension fund is in. If you can't find a statement, go and ask HR to go and give you one, because they're basically going to have to do it, or find out who the company your pension's with, and then find out from that company where your pension's invested. Like Alice said, it could be in a default fund. But it is interesting, there'll be companies that won't have chosen the pension scheme that they've got, that their employees have, based on any real ethical criteria, despite them having some sort of ethical criteria for their company and the way the company's run. So it actually could be an open door that you could be pushing on if you say, well, why is our company pension, not invested in line with the company's ethos? Because a lot of these pensions would have been set up years ago by very well-paid financial advisors, and therefore they not necessarily be changing things. I'm going to talk to people is the point, because you can make choices and you could start to invest ethically. Something that came to light recently when I was talking to somebody is that you could do research, for example, on an ethical fund, and your platform doesn't have it. Your platform of choice doesn't have it. So if you've got a SIP, for example, but that doesn't have to be the end of it. You don't have to just give up and then say, well, I'm going to have to move my whole pension somewhere else. You can contact the platform, can't you?
Absolutely, you can contact them and ask them to add it. And I think it's a perfectly legitimate thing to ask. I mean, we add funds all the time to our platform when new ones are launched, or something that we spot that or a customer comes in and wants it. And we're always trying to expand the choice on our platform. So I think it's, have that conversation. The other thing to add is that, about your pension, if you're looking at your workplace pension or your old pensions, because lots of us accumulate old style pensions over our working lifetime and we forget about them, we just leave them, and it's worth digging back and looking at old workplace pensions, and are they performing well? Do they have the options that you wanted? If they don't, you have the option to transfer your old pensions into a self-invested personal pension where you could get all the new options. Now, I'm going to say there are caveats around this. You need to read the small print of your workplace pension. You need to check you're not giving up any valuable benefits before you do the transfer. But we're finding a lot of people do want to have better control of their investments, and you can do that in a self-invested personal pension where you have those 5,000 investment choices to get to.
We've talked about funds, we've talked about your pension. There will be people who have direct investments, like they might hold shares. And somebody's asked the question actually about, can they vote at AGMs? How does that work? Is there any way they can influence the companies? And this was quite enlightening in a section of your book. Could you just fill us in on the rules and actually the power that people do have surrounding this?
Yeah, so I actually interviewed someone for the book who has become a bit of a veteran of going to these AGMs. If you have just a few shares in a company, you can go to the annual general meeting and you can ask a question. And so she had these sort of tips for getting her question answered, where she would like wear a bright top and make friends with the people with the microphones beforehand so that they would sort of notice her and she could ask her question. And she would, she would really prepare what she had to say and, make really good points. She said at one point she was at one of the Shell AGMs and people cheered her when she was saying, we really need to think about climate change and, dividends might be important, but the future of the planet is more important. I mean, she was a very inspiring person. You don't have to go personally to the AGMs. Another thing you can do is get involved with these shareholder action groups. So there's one called Share Action, for example, and what they will do is they'll pool a lot of small shareholders, so just, retail investors, and, push for a company to do something like disclosing its climate risk or something, or, setting climate change targets. And so this is something we're seeing a lot more of. It's, again, something that's really just starting to happen. And so far, the resolutions don't always, or often don't get majority support when they're actually put to the board, but they're failing by smaller and smaller margins. And I think the tide is definitely moving that way, because what you'll see with some of these smaller shareholder resolutions is that often some of the larger institutional shareholders who are ethically minded themselves will come in on it. So they'll sign up as well and they'll be like, yes, this is a good point. And, sometimes that's all coming from this grassroots group of individual shareholders, and the larger guys are getting involved as well. So yeah, you can definitely affect change if you're staying as a small shareholder in some of these companies, which is, arguably another reason to maybe consider not divesting as well. But it's entirely personal preference.
So there it was, our live event on ethical and sustainable investing. Can it improve the world and your wealth, with our guests, Moira and Alice. I hope you enjoyed that. Damien, we're done for that this week. It was kind of an ethical investing special based on last week's event. Have we got anything more to add?
No, I think if you've got any questions, then feel free to send them in. But more importantly, I want people to pick out topics they want covered on live events. I love doing them. They're very good fun in terms of interactive, getting experts on. We had the influence to get some good guests onto the show. So what is the top? Is there a topic? I mean, I'm pondering doing one about potentially separation or divorce. Lots of ideas that you might have out there, investing, otherwise, anything to do with money. It could be starting businesses. I don't know. If you have an idea that you would like a live event about, then send it to me, Damien@moneytothemasses.com. All the ideas, we'll go through them, and who knows, you may see a live event based upon your idea in a not too distant future in 2021.
So Damien mentioned the contact address there if you want to get in touch with him. If you want to get in touch with Damien about anything else, of course, you can use Twitter in the usual way. It's @moneytothemasses with the number 2. Don't forget, do join our Facebook group if you can. It's facebook.com/groups/money to the masses. We're so close to hitting 2,500 members, and if we can get that push before Christmas, that'll be brilliant. It'll mean in the new year we can help even more people. One last request, as we always do, if you could review the podcast, it would really help us rise on up those charts. So that's it, we're done for this week. Damien, until next time.